Joining us now is former Chief Economic Advisor under George W. Bush and Hoover Institute Senior Fellow Ed Lazear. Ed, it's always a pleasure to see you. Thanks so much for joining us.
Thank you, Maria. Always fun to be with you. Thank you.
What are you expecting? Because there is this narrative out there that things are going to slow down going into 2020 as the Fed raises interest rates, even if it doesn't feel so right now. What's your take?
Well, I think we're still not at the peak. We're still growing, and probably the best indicator of that is the labor market. If you look at job creation, although it slowed a little bit last month, the last 3 months of job creation have still been in the 220,000 range. That tells you that we're still producing jobs at about 100,000 jobs per month more than necessary to keep up with population growth. The reason that's relevant is if you're growing faster than population growth, it tells you that you're not yet at the peak. So even the labor market is not yet there. And, of course, we know that GDP has accelerated recently. So all of those signs still are hopeful in terms of where we're going. One last point I'd make on this in terms of forecasting where we're going in the future. My historical evidence suggests that the best forecast of the future is not so much past GDP, not so much past jobs reports, but rather the change in the market. And I usually use the S&P 500. And if you use that as an indicator of where we're going to be over the next 4 quarters, it's predicting somewhere between 3.25% and 3.5% right now. So, again, things look like they're good, at least for the next year or so.
Do you worry that the trade issues are going to cut into that? The president said no time frame for ending the dispute with China. That was the word from the president in a new Reuters interview, coming as tariffs on $16 billion worth of Chinese goods kick in on Thursday. White House Press Secretary Hogan Gidley just told me earlier in the show that the big picture of trade, tariffs, and the economy is still out there. Listen to this.
His policies are going to protect this country. That's what he wants to do. Also, in addition to that, it's not just China, but Mexico as well. We're on the precipice now of an incredible deal with NAFTA.
Ed, your reaction to the issues, even though we do see growth, we're worried about trade.
Absolutely. That is the concern. I guess what I would say is 2 things. First of all, I think the upside of the trade negotiations is not that high, nor is the downside that low. And let me give you a couple of statistics. If we think about our trade with China right now, we export about 0.5% of our GDP to China. So even if we were to double that, if we got a level playing field, which of course is what the president is hoping for, and we doubled exports, we'd be talking about an increase of about 0.5% of GDP, or at current levels, about 1/6 of the year of economic growth. So obviously positive, something we'd like to see happen, but it's not going to change the world for us. Conversely, we're not quite the 800-pound gorilla that we think we are. If you look at how much China is exporting to the United States, it's big. We're a big trading partner for China. That's true. But we still consist of only about 4% of China's GDP. So in terms of what would happen if we were to completely eliminate our trade, our imports from China, that would cost them about 2/3 of a year of growth. So quite significant, not a trivial thing, but it's not going to throw them into the Great Depression. So again, I think we tend to overstate the magnitude of these effects. That said, you know, I wish we weren't doing this right now. I don't think that's a positive for the economy.